I mean, with China now seeing its first Omicron case, I think before how they dealt with Delta raised a lot of questions about its COVID-0 strategy. How much longer can they push through with this, and what impact do you think Omicron is going to have on consumption just before Lunar New Year?
Happy New Year, Yvonne. I think this is certainly not a good news for China, but to a certain extent, we all know that the spread of Omicron is inevitable, right? So I think the Omicron is a real test to China's zero COVID-19 policy because of the high, transmissibility of the Omicron variant, right? So, previously China is able to say, they are able to have targeted lockdown, right? Say 1% or 5% of the population, so the rest 95% of the population can afford to live their normal life. But now I think you are seeing evidence that Omicron is highly contagious, and we're already seeing that Omicron is spreading into more areas. So there could be more widespread lockdown restriction measures, especially right before the Winter Olympics as well as the Chinese New Year. So I think down the road, the COVID-19 policy, one, it will certainly be quite unsustainable, right? It's just impossible to get 0 cases. And the second is just increasingly costly to maintain such policy.
Yeah, how costly will it be if, in fact, we're not going to see, well, most people assume that COVID-0 is going to continue on in China past the Winter Olympics. You also have the 20th Party Congress at the end of the year as well.
Yeah.
How costly is it going to be? Is 5% growth still achievable this year?
Yeah, I would say immediately the Omicron is going to be a very big hit to the first quarter economic growth, right? I think before the Winter Olympics, the Chinese National People's Congress in March, they are only going to strengthen the zero COVID-19 policy. So service recovery consumption will be hit, quite significantly. And also, I think from the latest PMI data, you saw that export orders is also coming down a bit. So which means the industry production may not be as strong as in the past to offset the weakness in the consumption side. So, previously we have the first quarter economic growth almost, 5%, right, in the first quarter year-on-year terms. But I think it depends on how widespread the Omicron will be. I think the risk is that it could come down to, say, 4% in the first quarter. Now, I think for the whole year, we actually still keep that 5.1% at this moment, because I think, if you have a weaker first quarter, then actually that is something the government will actually ramp up the stimulus, right? Which means the second quarter, rebound actually will be stronger to offset the weakness in the first quarter.
How do you see now this jobs report? Is it all but solidifying a March liftoff now for the Federal Reserve?
Yeah, I think the market is pricing in like 80% chance of a March hike, which is not surprising, right? Given that you are actually seeing a very tight labor market and Fed is being, quite hawkish. But we actually still, calling for an initial rate hike in the second half. Part of that is because, the hawkish, there is a difference between what the Fed says and what they will do, right? I mean, being very hawkish in communication, actually already seeing market interest rising, financial condition tightening, that actually reduced the need for early hike. And also, I would say that the Fed may also want to wait a little bit to get a clean, report on the payroll labor market, as well as trying to wait a little bit to see, what is really driving the inflation.
If you take a look at forward break-evens, though, I think we're back to those levels that are around the Fed's inflation target of 2% right now. Do you think that's an indication, Qian Wang, of the markets are starting to think that the Fed is able to rein in inflation, or will it cause some sort of policy mistake that could bring growth and inflation down too?
Yeah, I mean, now the first thing when we talk about inflation, we are expecting inflation to peak in the first quarter of this year, and the headline inflation and the core will start to come down a little bit later this year. But even so, by the end of this year, we still expect them to remain above 2% target, right? Now, I think the key question at this moment is what is really driving inflation? Is it really supply bottleneck, or is really the sticky component like wage growth, service, rent, right? So I think that is a question I think think we still need to wait a little bit to see the inflation picture and get more clarity.
In terms of in Asia, the economies that you look at, in terms of normalizing policy, do you see many joining the likes of the Fed this year? We have the Bank of Korea, of course, meeting this week as well.
Yeah, that's right. I think, for the central bank across Asia, in general, I would say they can afford to be a little bit more patient, and they will join Fed, but they can actually tighten or hike interest rate in a more gradual manner to actually allow more room for the economy to recover. I think the outlier is indeed Bank of Korea, right? So we probably will see them hike, probably this week, because of the higher than expected inflation, as well as the Bank of Korea's urge to contain the financial stability risk.
And I think China's just going the opposite direction, Chen Wang. Brings us back to the start of our conversation. Yeah. Everyone thinks that we're going to see targeted and limited easing. I'm just wondering, when it comes to the property sector, what do you see as the next risk there? And when are we likely to see more targeted measures in the real estate industry?
Yeah, I think, first quarter and second quarter will be quite a test to the market, because we are going to have a large amount of debt maturity, of the Chinese developers in the offshore market, right? So we will probably see more defaults of Chinese developer, and that is going to keep the market volatility high. But I think, on the other hand, you do see that the government, they have the tool and they have the will, right, to prevent the spillover into broader economy. They are actually trying to support the property developers, financing condition, as well as relaxing restriction on home purchase and mortgage, right? Especially some local government. So I think that will help to stabilize the property market. Now, I would say the risk is that the downturn of property sector cannot be arrested, and then in that case, you probably see China probably ease more, right? We are already expecting them to cut reserve requirement ratio, or say 1 year LPR MOF rate. But I think if the growth decelerate too much, then they will have to probably cut the 5-year interest rate as well.